I will be talking about building a strategy. Now, there are two sides of a strategy. I want to talk about a strategy and an edge. Those are the two sides of a strategy. What is a strategy? A strategy is like you having a tool, but an edge is you knowing how to use that tool. That is what a strategy is. A strategy is basically it's like having a sword. You have a sword, but if you don't have a good technique to use the sword, it doesn't matter how powerful that your weapon is, you will lose. Because you don't know how to use the sword. If you go into battle, you will lose because you don't know how to use the sword. That is strategy and an edge. Another example to really explain what a strategy is like having a car. It's like having a strategy. But if you don't have the steering wheel, you can't use that car. You can't use the car. Or it's like you have a car, you have the steering wheel, and if you don't have fuel, you can't move that car. So what am I talking about? In essence, a strategy is like your understanding of the market. A strategy is like your understanding of the market, and how you use that your understanding is what we call an edge. Being able to take advantage, the keyword, taking advantage of what you understand, that is what will give you profitability in the market. Now, what is the core of a strategy? When we're looking at the core of a strategy, the core of any strategy is built on repetition. That is the core of any strategy. The core of any strategy is repetition. As long as you can identify something that can repeat itself in the market, you have a strategy. And knowing how to take advantage of what repeats itself is called an edge. Now, anything that you understand in the market that can be replicated, that repeats itself over and over again, that is your strategy. Now, knowing that, okay, for example, most of you should know the W pattern or the M pattern. You know that once you see W, it will go like this. Once you see M, it will go like this. Why? Because you know that once this happens, this is likely to happen next. That is what the strategy is. You know that once this happens, this is the next thing that is likely to happen. So you need a good knowledge of strategy. When we're talking about repetition as the core of a strategy, you have to look at several factors that lead up to repetition. What qualifies as a repetition? You have to look at how the market behaves, what happens after that repetition, what happens after that repetition, because anything that repeats is a pattern. So you have to look at this repetition, this pattern. This is what usually happens after the repetition. You have to look at all that and knowing that is it. That is it basically. Just knowing what repeats, the pattern that repeats, and what usually happens after that pattern that repeats itself. Once you know this and you know how to take advantage of it, you know where to put your entries, you know where to exit, stop loss, take profits. You know what qualifies as an invalidation for your strategy or your pattern. And you know that this pattern it won't work. Now always build a good strategy. Now let's talk about components of a good strategy. What are the components that makes up a good strategy? Now a good strategy should contain of several factors that allows you to analyze different aspects of the market. Now we're going to look at market structure, internal structure, time, and your entries, exits, and validation. Now let's look at market structure. What entails market structure? We have to look at phases and waves. Now for these two things, they have to be repeatable. Anything market structure or anything the charts, it has to be repeatable. Now I talked about the core of a strategy being repeatable, being able to spot the repetition of a pattern in the market. Now the market you trade should be repeatable. That is why I talk about waves or models and phases. Those are the two main focuses on market structure. Why? Because when you look at models or waves, they are explaining market structure. They are explaining the highs, lows in a repeatable way. Like Elliott wave, it explains market structure in a repeatable way that is comprehensible. That is the good use of market structure. You have to know what repeats. So once you know wave or model that is repeatable, then you know the phases, because in the market there are times when the market is ranging, accumulating, impulse, retracing, things like that. You have to know such time when the market is behaving like that. In combination with the waves, it makes up a good understanding of market structure. You know what I said about your understanding of market structure being your strategy, and your usage of it is your edge. Now, understanding market structure is like having a good strategy, but how to capitalize or take advantage of that strategy is your edge. Now, this moves to the second component of a good strategy: internal structure. The internal structure should also be repeatable. Anything you are doing in the market should always be repeatable, and it needs a repeatable pattern. Now, what is the repeatable pattern in the internal structure? While the model or waves explains the market structure highs and lows for you, the trends and all that, the internal structure will tell you why the market is behaving like that. The external structure or market structure or the models of waves will just show you this is the way the market moves, but the internal structure will show you why it respects that zone. That's what the internal structure will do, and in a repeatable manner that you can take advantage of. External structure is your understanding. Internal structure is for you to take advantage of it. Now, if you know how to take advantage of it, that is your edge. If you know how to take advantage of your strategy or your model that you use or repeat, that is your edge. Now let's talk on an example of internal structure would be liquidity inducement. An example of internal structure would be liquidity inducement. Now, what is liquidity inducement? All those, we'll talk about those later. Now, let's move on to the third component of strategy, and that is time. Now, time is a very vague concept, to be honest. It is a very vague concept, to be honest. There is no firm holding on time. Time is very elusive. You can't actually, it is very hard to capitalize on time. Why? Because many strategies, many times, they all have their own time frame to look at, especially the pair you are using, the strategy you are using, the internal structure strategy you are using. Everything is different. So to capitalize on time, it is very hard to do so. You can see strategies like Silver Bullet, New York Q Zone, London Q Zone. I don't know much about those strategies, but it seems that they use specific time frame to take their entries. They use specific time frames. Now, if you know market structure, you know internal structure, and you know the time when it works, trading becomes very easy because you know what you are looking for, and you know the time that it happens. So all you have to do is know the pattern that repeats itself, and when it repeats, then all is left for you to do is just to come take your trade, and that is it. That is the good use of knowing the time that works well with your strategy. Now, for the last component, I'm going to be talking about entries, exits, and invalidation. Now, all those, it involves everything. It involves the first three things I've talked about: your knowledge of market structure, internal structure, and time. That will determine your entries, exit, and invalidation. There's no much talk on that. If you know what repeats itself, that is the first step to knowing a good strategy. Knowing what repeats itself is very, very important. You know what repeats itself, you know how to take advantage of it. It will present to you good entries, and you know when it will not work, that is invalidation. And if you know where to take TP or paraventure, it hits your stop loss, that is your exit. So if you know the first three, the first one will naturally present itself to you, but you still have to do your own work on spotting good entries. Yeah. And for the final topic, and lastly, we're going to be looking at the best currency pair and or strategy. In my opinion, there is no best currency pair and there's no best strategy. Of course, there are strategies that are better than other strategies, but I think the best strategy is the strategy that is adaptable to any condition of the market and on any time frame. If you can apply it on the higher time frame and on the lower time frame, that is a good strategy. Now, for the best currency pair. Now, best currency pair, it is very vague. As I said, just like time. But there are obviously good pairs you look at above the others. What makes a good currency pair? Now, what makes a good currency pair depends on the strategy you use. For example, when I was looking for the best currency pair to trade, because you do not trade all the pairs, because your strategy might work on all the pairs, but the pairs, they are too confusing for your strategy to work on. When I was looking for the best currency pair to use, I did a test on several currency pairs. I did a test on, does it present my strategy easily, and does it have the volatility I'm looking for, that is the liquidity. Now, when I mean the first one, does it present my strategy easily? Meaning, I looked at gold, I looked at US30, I looked at GBP USD, I looked at several other pairs. I discovered that on gold and GBP USD, it is easy to spot my strategy. It is easy to spot my edge in that currency pair. But when I'm looking at other pairs, it is very hard, it's very difficult, so many confusion. So not all strategies are made for certain pairs. So you have to look at what currency pair fits or suits the strategy you are using. Especially for me, that I'm a swing trader, I need a pair that is smooth and concise, and I know what I'm doing, I know what I'm looking for. Everything is clear. I don't need all those many spikes that US30 brings. No, I know what I'm looking for. So when I see what I'm looking for, I need it to be clear. I don't need to confuse myself with other pairs that will be confusing me. You just have to know what you're looking for. That is why, even though you have a good strategy, you do not trade all the currency pairs available. No, it won't work. It doesn't work that way. You just have to find one or two that is good, preferably one. I'm currently working on one pair. I used to work on 3 pairs, but the confusion is too much. I reduced it to 2. The confusion was still too much, so I've reduced it to 1 pair, and I'm currently backtesting on that pair so that I will be able to build and focus all my energy on that pair, so that I will fully master how my strategy aligns with that pair. Because when your strategy aligns with one pair, it is easier to spot your entries, spot your strategy, spot your edge, spot what works for you, rather than dividing your attention on several pairs. Maybe after I've mastered this pair for years, then I'll look for another pair to add. But that one also be another set of work. Why would I be going for another pair when I'm obviously making a lot of money on one pair? I'm just talking about the future, and now I'll be profitable. You just have to believe in yourself. So that is it for a good strategy. You just have to know what works for you, and the core of any strategy is repetition. You just have to know what repeats itself. If you know what repeats itself, focus on what repeats itself, then you have a strategy. And if you know how to take advantage of what repeats, that is your edge.